Good afternoon, ladies and gentlemen, and welcome everyone. And thank you for joining us today for this special session on behavioral investing. We are thrilled to have with us today Vivek Sharma from Gulaq, a renowned small case manager with a wealth of experience in helping individuals navigate their complexities of the financial world. And Vivek, just to introduce Vivek, Vivek is an IIT Kharagpur grad. In the past, he has worked in futures markets for a decade, trading in commodities and energy in US and Europe exchanges. Having been building systematic algos to invest and trade in India markets, currently Vivek is heading investment at Gulaq and ST. So thanks a lot, Vivek, for joining us today on this Sunday afternoon. Really appreciate.
Thank you, Rakesh, for having me and for the kind introduction. Thanks a lot.
So just to set the context, Vivek, and maybe then you will be taking over this session with your own insight. So as they say, it's not the situation, but the reaction to the situation which makes or breaks, right? So today we will be taking a break from your traditional fundamental research and technical research and how to identify multi-baggers. But in fact, we will rather delve into the fascinating realm of behavioral finance, exploring how our emotions and biases can influence our investment decisions. We'll also discuss some common behavioral biases, which Vivek will take us deep dive into, and that can lead to suboptimal outcomes as well. And we'll learn strategies for managing our emotions and making some rational investment choices. Of course, it's a journey, but it's always good to start somewhere. And I think this could be the first step towards at least appreciating and acknowledging that there is something called behavioral finance, which is responsible for the large part of the outcomes in life, and of course, investing in particular as well for the today's session. So before we dive into the discussion, Vivek, I'm just trying to set the context, and of course, please add wherever you feel like. By understanding the significance of behavioral investing, basically, we all understand it's a crucial aspect of investment success, and it helps us understand the psychological factors, right, that influence our financial decisions. So without further ado, let's embark on this journey of behavioral investing with our esteemed guest, Vivek Sharma. Vivek, over to you.
Thank you, Rakesh. I'll quickly share my screen. I have prepared a few slides, which I'll initially talk through, and obviously after that we can take questions. So this specific topic of behavioral investing or behavioral finance, it's actually quite close to my heart. And I'll tell you why. See, just a very basic example, Rakesh. Let's say we come across a very good stock tip. Although we all say we don't believe in stock tips, but let's say कि हमने एक company identify कि it has a very good prospects, and you shared that tip with two of your friends, right? And both of them actually are convinced that this is going to be a good company. Would both of them actually end up making the same returns? Obviously not, right? Somebody will have much more confidence, somebody will have less confidence, somebody will actually hold it for long, somebody would not, somebody would just keep trading, right? So what happens is we have our own fundamental understanding, technical understanding. Those are hard skills, right? And that is very much necessary. I'm not taking away from the fact that those skills are not required, but I think those skills would be useless if we really don't understand the behavioral part of it. Right. So these, at least in my experience of last almost 20 years investing and trading, I think these psychological issues have been for me much more important. And initially, first maybe 5-7 years, I learned it. I was not able to take advantage of it, but through making mistakes, I have learned it. And after that, at least I am now at a stage where at times I understand what is the behavioral part that is coming into the picture, why I'm taking those decisions, and have some more sanity, some more check as to whether that decision is logical or right or not. Right. So this is definitely, I think, equally important, if not more important. And I just start by this Warren Buffett quote: investing is simple. We all know, we understand the rules of it, but obviously the implementation of those rules, it's not easy. And I think what we are going to talk about is it's going to touch upon this, that why is it not easy and understanding. So first, one example here, just few weeks back, this was all over the social media, this specific study by JP Morgan. in which it has shown the returns of last 20 years of S&P 500, which is about 9.5%. And you can see that average investor has just made 3.6% returns, right? There's a fair bit of difference between the S&P 500 and average investor. And even if you consider that not everyone is 100% invested into equity, which they should not also, but even if you consider a 60-40 portfolio or a 40-60 portfolio between equity and debt, even if you see those returns, the average returns of an investor is just half of it. And why is that the case? I think one thing is that as an industry, as a financial industry or professionals, I think we are just trying to run after alpha, how to increase alpha. But we all know that at least to get those index returns should be fairly easy for anyone, right? Just invest in that index, do nothing. In fact, you don't require any skill, any understanding, just invest and forget, and you would actually be able to realize those index returns. But most of the investors are not able to get it because of the emotions, actually. So I think products are not important. We spend so much time in identifying which is a good mutual fund, which is a good small case. Obviously, those things are important. But at the end of the day, if your psychology, if your emotions, if those things are not set right, you actually won't be able to realize those returns by the product, right? No matter how good that product is, right? One more example I'd like to share about Newton. Obviously, we all know he's one of the most intelligent guys to live on Earth ever, right? And this is the story about South Sea bubble, which was actually the world's first bubble, and it's even considered the world's first IPO. In which what happened, and Newton actually was, because of all his invention and everything, he was actually a pretty rich man at that point of time. And he started investing. He invested a bit in South Sea company, made some money and exited. But then he actually also saw everyone else around him making huge money, and he thought I missed the bus and I'll enter again. He entered, and he entered at almost the high. He kept on entering, took a very big position, and ultimately, as with all the bubbles, it burst, and he actually exited and lost maybe about close to $40 million in today's money. Close to broke he was at that point of time. So again, an example that your intelligence obviously is going to only take you so much far, but if you don't really understand your own psychology, and even better the crowd psychology, but better be understanding at least how your own mind works, is super important for us as investors to make good money, good wealth over long run. So these two examples actually I like to highlight because to show how important this specific topic is. Next few slides, I'll quickly take you through the common behavioral biases that we all face. And this is, Rakesh, as you very rightly pointed out, this is not only to do with investing. I think life in general, we have to keep on making multiple decisions, be it in our family, in our career, or otherwise. So this is, I think these biases impact us as human beings, not only as investors, but as human beings. So if we understand these well, obviously it will help in our investing, but overall life in general. So one of the first bias that I'm going to talk about is the overconfidence bias. Yeah. So what is overconfidence bias? So I'll just take you through a study. In US, there was this famous study of college students where they were asked to rank their driving skills and compare it to the peers or average. And the result was quite striking that 88% of them ranked themselves in top half. They said that 88% of them said that they're better than average drivers. Obviously, we know that it can't be 88%. It just can be 50%. But most of us feel that we are better at driving. Or other study of college professors where 90% thought that they're above average teachers. Or in another study of high school students, only 1% thought that their social skills are below average. So this is a very common phenomena of adults or even kids, that most of us feel overconfident not only about our investing abilities but other abilities. And how does this impact us? I think we all know, we have seen, and maybe we have done ourselves also, because we feel that we are better than average drivers, and we all understand that using cell phones while driving is not really safe. But we feel that it's actually, that's a rule meant for everyone else. I am much better than average driver, and it's actually not meant for me. This is how that overconfidence bias, just a small example of how this impacts us in our day-to-day life, right? Now, how this manifests in investing? Broadly, two ways. One is, whatever outcome we are expecting, we tend to ignore tail risk, and we expect that the returns would be in a very, very narrow range. If we have to say what will be the equity returns over next 1 year, there'll be actually very small range. So we are much more certain of the outcome, right? And second is estimating the probability of expected outcome. Again, this happens why? Because in selecting individual stocks, or we trade too often. So these are two broad ways it manifests, and the actual impact of it is, many of us trade in futures and options. Even we know SEBI sometime, I think few months back, actually they came that with a report saying that I think less than 10% of the FNO traders were actually able to make FD returns. So it's a pretty low percentage, but still most of us, for the reason of overconfidence, we feel that we'll be able to do it, right? We trade in individual stocks. We try to pick individual stocks. And we all know that even for very, very professional managers on small case platform, it's a hard thing to do. It's not a trivial thing to pick good stocks, right? But as investors, we tend to pick individual stocks on our own or through our own research, either talking to friends or going on few websites and figuring out this is a good stock. Again, this is a very hard thing to do. We try to time the markets, when study after study has proved that it's obviously one of the very, very hard thing to do, even for professionals. We under diversify. We think that we understand all the risks involved, and we tend to under diversify. We tend to take concentrated trades or concentrated bets in market, right? And obviously then we ignore the tail risk, thinking that I understand all the risks. Like for COVID, there are many risks which we understand, which we know, but then there are many risks, Rakesh, which we as investors don't really understand, right? Or we don't even know these kind of risks could be there. Like for COVID, just before COVID happened, nobody would have actually thought that this kind of a risk is actually possible in the markets, when the world would actually just shut down. The whole world would shut down. Nobody would have actually taken that into account while doing their risk analysis, right? So these are the ways that overconfidence impacts us primarily as investors. Right? I'll move on to the next, which is the prospect theory. Again, this talks about how we as investors treat profit and loss, right? So let's say I'll just take two problems. One is, I give you two options. You take $900 for sure, or you take another chance B, which is you get 90% chance that you get $1,000, but then there is 10% chance that you get zero, right? Which one would you choose? Again, you're looking at, mathematically speaking, if you take 100 chances, both of them are pretty much the same, right? But most of us, because we are getting one chance, most of us actually would go for one. The other reason is actually, I'll just talk about, but most of us actually would take a short win, even though it might be smaller, right? Yahan pe, even if I increase the odds a bit to 1100, most of us will still go for the option A here, right? And in second problem, let's say I just turn this and I say, which one would you choose? Whether it is you lose $900 for sure, or 90% chance of losing $1,000. Again, this is pretty much the same, but here most of us actually would choose 90% chance of to lose, because we want to avoid at whatever cost. In our mind, what we are thinking is, I want to avoid this loss. And even if there is a small chance of avoiding, and even if that meant that I'm taking higher risk, I'll actually want to go for that option. That's how our mind works, right? So this is what I'm just trying to convey here, that when we are sitting in profits, we tend to think differently. when we are sitting in loss, we tend to think differently. So let's say 100 rupees profit will give us some joy, but 100 rupees loss will not give us equal amount of sadness. The sadness or the sorrow will be much, much more actually than what the joy we'll get from same amount of profit. And how this then impacts us? Again, we prefer certainty over a gamble when it comes to gains, right? But in losses, we are actually more risk seeking. We want to take more risk just in order to avoid the losses. So again, think about it. Let's say you have a portfolio. You have chosen 10 stocks, and then few of them would be in profit, few of them will be in loss. And now I want to take out some money. And what we all most of us will do is let's book our profits. Abhi profit ho gaya isme, let me take out some money, so I'll keep holding the loss making ones. Whereas what is clear is ki these are the wrong trades. Most likely these are the wrong trades. But what I'm doing is I'm actually taking away money from my winners. This is what we all do, right? We are averse to losses. We resist realizing our loss. We are risk seeking when it comes to losses. Again, we would have seen, Yarki, I bought this stock 5 years back. I bought it at 100. Right now it's at 70. I'm just waiting for it to come back to 100. I don't want to book that loss. And even if that makes us wait for years and years, most of us would have a stock which we have kept, which is still in loss. We are just waiting our break-even point. When it comes, then I'll exit, right? Again, this is a very important point. If we have a very large loss in a stock, let's say unusually large, then what actually happens is, for some reason, our risk appetite actually increases a lot. I tend to take much more higher risk, even though as my risk profile is not that high, it might not be that high, but still I'll tend to take on very high risk in that case, right? I'll next move on to the third bias, which is the representativeness bias. So just because some person or a book or something looks like the way it is, we tend to make some typical choices based on the first look. It's a very famous saying, judging a book by its cover, right? So we all do that. And why do we do it is because it helps us mentally also. We love shortcuts, right? We want to find out the solution to a problem in the shortest way or the easiest way possible. And that's why our mind actually takes these kind of shortcuts, because actually it helps our mind make those decisions, right? So similarity of object that is confused with probability of an outcome, or it's a kind of a mental shortcut where we are either estimating the probabilities or situation. So again, it's kind of a shortcut. And how this impacts us, would be that one of the thing is, we equate great companies with great investments. Now, great companies or a company making great products, it might or might not be a very good investment. It will be a good investment only if my price at which it is available is right. If it is overpriced, as with most of these cases, all great companies would most of the times be overpriced only, right? So it might turn out that it's really not a very good investment. हम सबको लगता है कि Apple, because it's a company making great products, it would be a great investment, but not necessarily. Only it's a great investment at the right price. Again, second thing is, we tend to predict future performance based on past performance. Again, it's a kind of representative nice bias, because just because that company has given, let's say, doubled money last 3 years, it does not mean in the next 3 years also it's going to double. But we tend to think that way. But it will only happen if the business prospects are same. If the business prospects have changed, something has materially changed in that sector or the economy, then the future returns obviously won't be similar to the past returns. But that's what we kind of think. Again, one of the representative bias, Rakesh, is, let's say if a company came out with very good results for a quarter. Now we tend to think the results means returns. And that is again not the case, right? In the very long run, yes, that's the case. but in short run of 6 months, 1 year, that's not necessarily the case. And we have seen some very good portfolios not doing well because for whatever reasons, but actually just because of returns, because of the performance or the results, you really can't expect that the investment returns would come. That's not how stock markets work. But we tend to make those correlations, and that's how we tend to make our investment decisions. Right. Uh, the fourth bias that I'm going to talk about is the herd mentality. I think this is quite common. We all understand herd mentality in most of the fields. Why does it happen? It happens because all of us has desire to be accepted in a group or a community. We actually have a strong sense to live in conformity with social standards. We don't like to go against the social norms. And individuals follow the crowd because they assume that others might know more than I do. That is one of the reasons that we follow herd mentality. And lastly, it is because of the fear of being alone, fear of being left behind, or FOMO as we all know it, fear of missing out, right? One of the things that I can also point out is the leader of that herd. He also feels that because there are so many people following me, there must be something right that I am doing. So even the leader of that herd mentality actually goes through the same bias actually, because he feels if others are following me, then definitely I'm doing something right. Right. Again, this happens in most of our life, be it in voting, be it in riots, sporting events, religious gatherings, or obviously in investing. Herd mentality plays a huge role. And most of the bubbles, most of the burst, actually, they are because of the herd mentality. Many of us would know about the tech boom, where just a company, if they, no matter in which industry it was, if you just place in front of your name, if you just place .com, your stock price actually will double in a week or so. That's actually what used to happen in tech boom. Everyone was buying because why everyone was buying? Because everyone else was buying. And I knew that if I buy today, 1 month down the line, I can sell these specific stocks at very good profit. And it actually lasted for a while, right? Same thing, similar kind of thing happened in 2008 mortgage housing crisis in US, where everyone was buying these houses because they thought that that's how it works. Housing prices never go down, and I can and these companies also, they were more than willing to give mortgages on these houses. And ultimately, it turned out to be a bubble which burst in 2008, and stock prices the world over fell 40, 50, 60%, right? Again, more recent example of 2021 GameStop, a US company, in which few of the traders, and this was actually retail traders, and they got together on a social media site, and they thought, let's bump up. Initially, it was the reasons were right, but then everyone which joined the bandwagon, they were just thinking about, because it's a bubble, I'll buy it, and I'll sell it in a month's time, right? So they are definitely, if you understand the game, if you understand what's going on in the market, you can actually use these biases in your favor in actually to make money, right? So it's not, you have to really understand these biases in detail, and understand what's going on in the investor's mind. And definitely, if you understand, if you have that kind of understanding, you can actually take advantages of these biases in your investing journey. Right. Lastly, I'll talk about the last bias, which is the self-serving bias. Right. So in this, as the name suggests, in self-serving bias, what happens is uh, any good decision we attribute it to ourselves, but any bad decision means anything which turned out to be really bad, failure, we won't take ownership of it. We'll want to attribute it to someone else. Um, so what happens in this case is we are unable to learn. So if let's say if I'm always saying that this is not my mistake, this has happened because of my colleague or someone else, I'll never be able to take ownership of it, and I'll never actually improve, right? That's what happens in this bias. Again, very common bias, not only in investing, but in our life in general. Uh, what happens because of this bias is, as investors, we become overconfident in our ability to select stocks. And again, when the results are not good, I can easily say, yeah, the current markets are not good, or the company's management is not taking right decisions. That's why the stock is losing money. Or I'll attribute it to my friend that he gave me the wrong advice. He really does not understand the markets. And that's why I lost money. So I'm not taking ownership. And because I'm not taking ownership, there's a very good chance I'll repeat that mistake. I'll keep on repeating that mistake because I have not internalized that mistake, that this is happening because of me. It's only the good decisions that I am attributing to myself. Right. So I think, Rakesh, I'm done with the PPT that I've prepared. There are a few smaller points that I'll discuss, just one slide, but I'm done from my side. We can discuss and take questions also.
Sure. Thanks, Vivek. I think that was really a detailed one, and a lot of things got covered from knowing the kind of biases. Because the problem in the first step is we actually don't know what are those
Yeah.
biases, right? So at least
Yeah.
the introduction to those biases itself gives us an opportunity to, as you rightly said, internalize, right? We
Yeah.
always try to find reasons outside us what went wrong. I think there are a lot of things which are just lying within us to
Exactly.
that introspection. It sounds very philosophical, but I'm sure we both have been in the markets for last 23 years. Even I've been in the markets, and as you rightly said, first 10, 15 years, we all went through that, right? It's not that we know it all, and it's a journey.
Yeah.
We are still learning, but at least we are in a position to acknowledge that yes, there is something uh, called behavioral finance. So for me, I'll tell a very personal story, and which I don't know whether I've shared this with you or not. So in 2020, right now, everybody, we can talk a lot of things about 2020, but sitting in
Yeah.
March 2020 and April 2020, what were we supposed to do is what actually mattered, right, in the long term, right? In the hindsight, we can always say, "Arey, maine ye kar liya, wo kar liya." But for me personally, I'll tell you where I'm coming from. So I just could do only one thing right, which I feel I didn't panic. But again, as I told, it's a journey, but I couldn't gather courage enough to go all out and buy, right? And that is why I keep on saying it's a journey. I still have to learn and crack that
Exactly.
behavioral thing, right? So
Yeah.
I was so happy about it that, okay, I've at least covered that distance from the behavior point of view, because it was the situation same for everybody. But I
Yeah.
think every person reaction was different to that same situation. And the outcomes, of course, has to be different for everybody, all of us. It can't
Yeah.
be like, okay, boss. And again, a very random example, which again, I keep on giving to a lot of people, especially my colleagues who have been just entering the markets. कि भाई जब बिल्डिंग में आग लगती है, it's same for everybody, right? But there will be
Yeah.
some guys who will wait for the fire brigade to come, and there will be some guys who will panic and just jump out of the window, right?
Yeah.
So
Exactly.
when somebody dies, we say boss आग लगने से मरा नहीं, वो कूदने से मरा, खिड़की से कूदा इसलिए मरा, right? But then I think in that heat of the moment, we just conveniently say कि boss fire लगी थी, and the
Yeah.
tragedy happened. So just coming back to where you left, Vivek. So just taking the next step right now that we have acknowledged, and of course, we as investors will have to read a lot, we'll have to study a lot. It's just about introducing this study, right? So tell me something. Do you have anything which you have gone through, any steps or method where a investor can educate himself or herself about various
Yeah.
biases, and how to handle those biases at that particular moment, like
Yeah.
how they can eradicate those negative
Right.
biases and make better decisions and all that? And if you have some tools or some experience of yours, that will be really helpful, Vivek.
Yeah. So, first of all, I think, what again you very rightly pointed out, one of the first important points, and that I think is the most important point, that we understand these biases. What all are the biases that impacts us, right? कल को मैं अगर let's say कि I'm going out to buy a house, right? What most of these brokers would do is they use a very important technique or very common technique, anchoring, right? So, or even in shops, when you go and buy clothes, somebody is showing you, it'll show you, first of all, house-wise, it'll show you something very, very expensive, which is really out of your budget, right? And when they show you the other ones, which are actually cheaper or cheaper than the initial ones, you'll find ki, haan, yaar, this is now cheaper. This is something that I can think of. So, wo anchoring, it's using the anchoring, right? So that's a very common bias. So first of all, the point I'm trying to make is we understand what all are the biases that we as investors or we as human beings go through. First is, and that is, I think, the biggest in my personal experience, the biggest step has been the recognition or the understanding that I am going through these biases. And I'm not saying that now, after understanding all of this, I have corrected them. But yeah, I've become a better in making decisions because I understand that these are the biases that I go through. Rakesh, what we have to understand is, see, most of these biases are happening because of thousands of years of evolution. Herd mentality आई कहाँ से है, right? Earlier, when we were living in jungles and caves, uh, it was always better to live in herd, right? Because of the fear of wild animals. So actually, that mentality is there in our mind for thousands of years, and it's not at all easy to correct. So first step is, obviously, the biggest step is the recognition. I think second part, which I have realized over the years, is make your decision making systematic, right? Make your decision making systematic so that, let's say, आपने एक 2000 ये कोविड का एग्जांपल दिया, you did not panic, but always अगर हमारे पास एक सिस्टमैटिक तरीका होगा कि दिस इज हाउ आई एम गोइंग अबाउट इन्वेस्टिंग. If markets increase 10-20%, this is what I'll do. If markets increase 50%, this is what I'll do. Or if they decrease, this is what I'll do. Right? So as of now, because we are not in any panic, and when I'm making these rules, when I'm making these systems, I can think logically and decide that these are the rules that I'm going to follow. And you can keep on coming every 3 months, every few months back. You can come back to those specific rules to your system and see whether how can I improve that. But have a guidebook, have some broad rules in your investing that these are the things I'm going to do, right? So one of the very common things is, let's say, somebody who is following, and I like asset allocation. I think it's a very beautiful, easy thing to do. And let's say somebody is doing asset allocation of 60-40, 40 he's following. So his 60% is into equity, 40% into debt. Now, what is happening? Let's say we are in going through that COVID crash where markets have fallen by 40%. So जो मेरा 60% है, that would have reduced to maybe about 40 or even lower, right? So I would be actually sitting in 40% equity and 60%. So, but my what I have decided is I want to follow 60-40. So what I would have done in that case is कि 40, because now 40% equity है, I'd sell some debt and move back to equity, right? तो जितना ज्यादा market नीचे जाती जा रही है, I'll keep on selling debt and I'll keep on moving to equity because that is a decision I have made कि my assets 60% should always be in equity, right? So that's one of the ways, one of the systematic ways I can follow during any crisis or even bubbles also. तो अगर कल को मार्केट सडनली लेट्स से कि 50% बढ़ जाती है, तो आपका जो 60% इक्विटी है दैट विल बिकम मे बी 70-75. तो you'll sell some equity and move to debt. So that's a systematic approach. So again, to the extent it is possible, make those systems in your head, or maybe better write it down and try to follow those systems, because जब crisis आती है ना, we are unable to think on our own. Nobody can actually think the right way. Because see, again, some very interesting thing that I read about these crises is कि 2008 में tech boom हुआ, फिर वो burst हुआ, right? So what every investor, what everyone will do is कि I understand this is a risk. कि tech में इस type से हुआ है, it can happen in any other sector also. So that is very less likely to happen in the future कि एक specific sector में listed securities में वो. But then 2008 में it happened through housing actually. It was not actually a stock bubble. It was actually because of housing we had that crisis, right? तो जब भी कोई क्राइसिस आती है, अब हमने देख लिया 2020 में कोविड क्राइसिस, तो अब मेरे दिमाग में क्या चल रहा है, यार अगली बार अगर ऐसी सिचुएशन आएगी ना, फिर तो मैं ऑब्वियसली आई मैंने इस बार पैनिक नहीं किया, बट अगली बार तो आई एल गोइंग टू टेक ह्यूज एडवांटेज ऑफ इट। बट अगली बार ये नहीं होगा, अगली बार कोई नई क्राइसिस होगी, इट्स गोइंग टू बी समथिंग न्यू विच नोबडी इज प्रिपेयर्ड, राइट? तो बट इन आवर माइंड व्हाट वी थिंक इज वी लुक बैक कि अगली बार ये वाली क्राइसिस होगी तब मैं ऐसा करूंगा, बट वो वाली क्राइसिस नहीं होगी, अगली बार इट विल बी समथिंग एल्स which will feel like the end of the world. Like in
Right.
COVID, it felt like, yeah, the world can end, right?
Sure.
This is same thing happened in 2008. I was trading at that point of time, and it felt that the world or the financial industry could end the way we are seeing this financial industry, that could end in its current form. That was the fear of biggest banks like Lehman and Bear Stearns going bust. So I think irrespective of those things, if we are able to systematize everything, that's going to help us a lot. I think the third and the final thing I would like to point out, Rakesh, here is what has helped me personally is meditation. I have been meditating a lot. Obviously, we have spoken or about this earlier also, but I have been meditating. I meditate a lot. I have been in stressful jobs earlier. Trading day in day out was quite a stressful job, and meditation helped me. That's how it got started. But I think the one of the biggest advantage is your if you become good at it after some time. I still don't say I'm very good at it, but it helps me. At least I'm in a stage where more or less I'm aware of my mental makeup right now. What is going on in my mind? What are the reasons? I'm much more aware of my thoughts. I think that's what helps a lot. जब आपने भी अपना 2020 का कोविड का एक्सपीरियंस शेयर किया, आई थिंक व्हाट यू वर गोइंग थ्रू इज यू आर अवेयर ऑफ योर थॉट्स, वेरी मच अवेयर की व्हाट्स हैपनिंग. आई थिंक मेडिटेशन इज द सिंगल most important tool for me in helping figuring out these biases and try to take some advantage. Again, having said that, these are the things that has happened to us for years and hundreds of thousands of years. It takes time to even learn small things. It's a very long journey. I think first few years it's very hard to take advantage of it. Only thing is you can recognize and not make those mistakes, but after a certain point of time you'll actually reach a stage where you'll actually be able to take advantage of it or also. So a crisis hota hai, to the people who are good at it are able to take advantage and able to actually use it to their advantage.
Sure.
Those are some of the things that I have experienced which has helped me in my journey.
Perfect. Perfect. So Vivek, while you were sharing all this, there were a lot of thoughts which were just going in my mind. And one thing which came to my mind, and this is again very personal thing which I want to share.
Yeah.
So India is a very, very diverse, cultured country, right? It's a nation of many nations, so to say.
Exactly.
So,
Yeah.
and you have been telling this, right? There are a lot of things which have been just going on for thousands of years. So have you come across, and I'm sure you have, especially the social norms, the culture, uh, how much they have influence on our financial behavior, and how one deals with that, because they are
Yeah.
again so deep rooted. Like, so again, a very
Yeah.
small example. So I have, as a growing child, right, in my family, I have always seen my parents investing in either gold or FD. Now equity
Exactly.
का E पता नहीं था. So I think personally it took me almost 10-15 years, in spite of
Hmm.
working in equity markets,
Yeah.
to come over with that thought that was I should invest in equities for a long term. Otherwise, I always thought नहीं, equity में बस काम करना है, बाकी ये अपने लिए नहीं है.
Yeah.
When I
Yeah.
see my children, right, now they have not seen me, at least in their growing years, investing in an FD. Now, does that change with that, or is there some other approach? Because I don't see that somebody should wait that long to change that, right? So
Yeah.
if there's
Yeah.
some other way or other hack to it, that if that social norms or culture also can be addressed via these studies.
See, Rakesh, I think what has happened over the years is, and I don't think how much we realize it, but one of the big change that has happened is because of SEBI, because of all the regulations being very strict in equity markets. Obviously, we are one side of that equation where we are providing services, and at times we feel these regulations, they're a bit uh, it has become very hard to do business, right? We times at times feel, but the other part of the story is that is very much required for that trust to build from the investors side. Because Rakesh, I think the equity or the FD culture in India is also because it had a very good reason, right? Because these companies, there were so many scams earlier. Like if you look at 15, 20, 25 years back, you really couldn't trust a company or its financials. And there were so many scams going on, and that is why people were not investing in equity markets. FD is actually safer because of a reason, right? Now, what has the change that has happened is because of all these regulations which have come in. I think scams, obviously, they'll always be there, but the frequency of it has reduced drastically, right? And the companies, their balance sheet, whatever, most of the things that they're doing or saying, we can mostly, at least for the listed companies, we can fairly expect that they're doing the right thing, right? And because of these, obviously, regulations. And that equity culture, because it was not there because of that reason, it has changed. The regulations have changed. Companies have become much more better now. But that culture, it's taking some time to change. And that's why that equity culture is not there. I think it's taking some time, but going ahead, it's going to change in a big way. I was just reading that 3-4 crores of mutual fund portfolios are there, whereas the number of people who actually are ordering online food is about 40 crores or so. I think we have to make it so much easier, so much frictionless, that the ease at which you are able to buy food or order something with same ease, you should be able to invest also,
Sure.
right? So I think that has happened. Second is, one of the common perception that we feel is that equity is liquid. In my mind, equity is definitely not liquid, and that's why I don't invest the money which I need for next 2-3 years in equity. It's illiquid asset, because if you're treating it as liquid asset, that means you can withdraw anytime, and that there's a risk. Short term, obviously, there's a risk. So equity, it's if you treat equity as it's not a liquid asset, like we treat our homes, right? Or any other real estate investment. In our mind, real estate is not a liquid asset. हम एक महीने के बाद दूसरे महीने तीसरे महीने नहीं वो उसमें ट्रेडिंग करते. So if we treat it the same way as equity investments in general, I think we'll do much better, right? So equities are definitely, if we take out equities are liquid and we actually invest for long term, we'll do much better with our investments.
Sure.
So those are some of the thoughts which I don't know whether I have answered your question, but those are some of the thoughts about the general perception of these asset classes
Sure.
around FD or equities that I have.
So again, from whatever I've understood so far is biases are more internal, but I believe there are a lot of external factors as well, which contribute to build those biases, right? All those situations, all those events.
Yeah.
So coming to very specific, and especially in the midst of things which we are right now, and of course, both are interlinked. So one, definitely the elections is around the corner, and we all know how media has always been playing a very, very important role, right? In causing biases among people at large and investors in particular as well. What will be your take from, again, behavioral finance perspective to handle this kind of environment, and how our biases can be challenged here, or we can take care of ourselves in this kind of environment?
Yeah. See, one of the common things, I think you rightly pointed out, the environment that impacts us plays a huge role. And I think social media has a big role to play in that. Personally, I've been much more active on social media, LinkedIn, a bit on Twitter, on Instagram, but mostly on LinkedIn. But the accounts that whatever people we are following, at least from my side, I want to follow those kind of people who are adding some value, not in the short run, but in the longer run. So if somebody is talking about a specific, some short-term events, actually, I really don't care so much about short-term events. And if somebody is talking about, I want to avoid, and I want to learn about, obviously, these biases, but how the things are shaping up in the longer run. So if our thought process is much more longer run, that's how I try to surround, not only in online world, in social media, but even in the physical world. I think the kind of people that we get in touch with, or the people we look up to, that creates a huge impact on our decision making, right? if I'm following a lot of people who are making, if all my friends are making huge money in crypto, it's very hard for me actually to avoid crypto, right? It will be really, very, very hard for me not to invest in crypto. No matter what I believe, if all my friends are investing, I'll end up at some point or the other, I'll end up investing in crypto, right? So I'm not saying it's bad or good. What I'm saying is what my friends or what the most of the people on social media that I am following, that I look up to are doing, I'll end up doing that. So I think choose your heroes or choose the people whom you look up to wisely. If you're doing that right, I think most of it, then the impact actually could be the positive also of your surroundings on your bias, right? So it works both ways, positively, negatively. Just be aware ki how this is impacting me. Is this something that I want to take away? Again, with so in media also, I think media, uh, most of it they talk about short term, but there are few people in media also that I look up to who do very good coverage of the things that are going on, and I actually follow them. So again, with media, I don't want to paint them with the same brush. There are few people who are doing an excellent job, and that's what I follow mostly. Uh, and most of the others, I just try to stay away. So
Sure.
yeah, I think be aware again, be aware of your surroundings, of your environment. That has a huge impact on how we think, how we act. I think there's this famous quote by someone, I don't remember, but we are the average of five people that we spend most of our time with, right? So yeah.
Perfect. So no matter how much I would have wished not talking about the product today or talking about what Gulaq is doing, because I just wanted to focus on this behavioral investing part of it. But then we all know, right, how our investors are.
Yeah,
Let's come to the point kind of thing.
yeah,
And I just don't want to disrespect that part also by ignoring those questions. So just wanted to
definitely.
do a very
Sure.
common question around your Gulaq as a platform, and specifically the Gear 6, which has been like super popular. Like in the last 3-4 months, we have all seen the journey of Gulaq Gear 6, right? You have been super patient with that product. It has been on our platform for a while. But as we know, right, everything has its time, and you have stick to your rules. So it would be great, Vivek, if you can just throw some light on Gulaq and Gulaq Gear 6 and all that for investors to understand what exactly goes behind the scenes in making that portfolio such a rockstar portfolio as
Yeah.
of.
Yeah. Yeah, so Rakesh, as earlier I have spoken about how to avoid these biases, and one of the ways that we can do in life and when investing is when we make things or decision making systematic, and that is, I think, Gulak's approach also, right? So we try to stay away. We are not choosing stocks. What we are trying to do is we are making rules for investment. We are making rules to pick the good stocks or the good sectors. So in Gulak, we are a quant fund. Okay, so most of the things, there's so much of data these days, data that we as humans really can't make sense of. There's so much of data. So we are using machines in quant or systematic investing. We use machines to pull all that data and to process it for us so that we are able to make better decisions and faster decisions. So it's a quant fund which looks at over 130 factors. What I don't want to say is ki one factor is good, another factor is bad. I don't want to say momentum is good, value is bad, or value is good, momentum is bad. They're they're all good, they're all bad. In certain times, momentum will work. In certain times, value will work. Certain other times, quality will work. So these are the factors that impact stocks, right? And what we are doing is trying to take slightly longer term view and make our uh, pick stocks not on the basis of one theme, but multiple themes or multiple factors. So out of these 130 factors, this is 130 factors are a mix of fundamentals and technicals, quant factors, and global macro and local macro factors like inflation, crude oil prices, gold, FX rates. These are global and local macro factors. Based on this, we figure out what is the regime, current market regime we are currently in, and based on the current regime, what are the things that are likely to work in this kind of markets, right? So we are not focusing on one thing forever. when, let's say, we talk about electric vehicles. Obviously, that's a great theme, and some great companies are coming up, but it's not going to work every year, right? So what I want to figure out is in the current market, in the current scenario, what are the sectors, what are the kind of stocks that would do well, and I'll just pick those stocks in a very systematic, rule-based manner, so that my biases or anyone's biases are not coming in. All our research team, what we are doing is trying to make better rules for picking of stocks. So very systematic way of doing things we have, and it's more robust because we are not focused on one theme, but a mix of multiple themes. That's how I would say what we are doing in Gulaq.
So, Vivek, as we all know, right, post-COVID, especially because of the lockdown and work from home and all that, there has been like huge influx of investors, and especially the Gen Z, as we all call them, right? So one of them is basically asking, as a young investor, I'm always looking to earn return in a very short-term time frame, because of which there is no process involved. How do you think this mindset will eventually affect my long-term wealth creation vision?
Yeah, I think very good question. I have pretty strong views on this, Rakesh. See, initially, obviously, when we are starting out our journey, we want to learn more about investing, understand what makes a good and bad investors. All of those things we need to spend time on, but our time is limited. But initially, if you see, our portfolios are pretty small. Let's say somebody has worked for 2, 3, 4 years. His portfolio really won't be in few crores. It'll be at maximum few lakhs. Let's say 5 lakhs on the higher side. It is 5 lakhs, right? And based on the time that you spend on picking stocks, picking good sectors, all of that research. So, few people do spend that kind of time, and you are able to bump up your returns by about 5%, let's say. And that is pretty hard to do, but let's say 5 or 10%. तो आप कितना बना लोगे 5 लाख के पोर्टफोलियो में 10% एडिशनल रिटर्न्स भी आपने निकाल लिए तो इट्स 50%, 50,000, sorry, right? So on an absolute basis, it's not having a bigger impact. Rather, what most of us should do is, in the initial years of our career, the biggest asset is our time and our skill set in our chosen field of profession. So if I'm a doctor, if I'm a marketing professional, और मैं अपना काम छोड़ के या उस पे उतना ज्यादा टाइम नहीं लगा के आई एम स्पेंडिंग टाइम ऑन पिकिंग स्टॉक्स, राइट? तो मेरा रिटर्न्स ठीक है, मेरा रिटर्न्स थोड़ा सा बेटर हो जाएगा, बट इन माय द एक्चुअल ग्रोथ इनिशियली वुड कम फ्रॉम इन्वेस्टिंग, और वो इन्वेस्टिंग का पैसा एक्चुअली आएगा आपकी सैलरी से, जॉब से, और व्हाटएवर बिजनेस यू आर डूइंग. So my advice mostly for the younger people is, most of the time you should actually spend on your career in trying to improve your skill set, do better at your job. That is going to yield the maximum returns, right? So don't spend too much time on picking stocks. All of that, I think, if you want, don't trust anyone. You just pick index funds or ETFs, or if you trust some manager, some small case manager or a mutual fund manager, give him the money to manage. But your own time, you should actually think about yourself, how you are going to do well in your job, improve your skill set, do all of those things rather than spend time initially. After a point of time, when your portfolio becomes large, then you can have meaningful impact, and then maybe you can spend more time managing it. But initially, I don't think we should spend too much time thinking about portfolio. Think about yourself, your career, your chosen skill sets. All of those would have much bigger impact on your portfolio rather than which product to pick right now. तो उसमें बहुत ज़्यादा time ना लगाएं. That's what I think I would say.
And just to add, Vivek, what you just said, it makes so much sense, right? Just to add, and again, whatever I'm sharing, this is again all coming from the personal experience. So I strongly believe habits are very tough to be broken, right? Once they are formed. एक वो फॉर्म होती नहीं है, और फॉर्म हो गई तो फिर ब्रेक होती नहीं है. So it's always good to have good habits formation rather than habits which will haunt you in the later part of the years. And as you rightly said, in the initial stage of our life, the capital is so low, and even if you form a bad habit, initially it might not give you that kind of pain, but that habit remains for life, right? And you will keep on doing the same things even on a larger portfolio later with your hard-earned money. and
Yeah.
it will be very, very difficult for you to unlearn a lot of things at that point in time. So
Right.
very, very strong point made by you, and I just can't agree more. And for me, I think one of the point you have already touched about seeking professional guidance, right? For me, what has worked is definitely two things more on the portfolio front, which I strongly advise to whoever I meet, that please develop a long-term investment plan and set a clear financial goal. Because we can't keep on moving our goals based on the market conditions, right? Our goals has to be fixed. Of course,
Fixed.
we can navigate them, we can change our course of journey and all that, but we can't keep on changing goals. In fact, I think most of the people I meet, they don't even have a goal. कि जो मिला वही वही हमारा गोल था, मिल गया तो चलो गोल अचीव हो गया, बट गोल क्या था किसी को पता नहीं. So you just sit in a train
Yeah.
without having the destination in sight, right? जो पहला
Yeah.
ट्रेन बैठ गए, उन्होंने बोला ले लिया ये स्टॉक, इन्होंने बोला ले लिया वो म्यूचुअल फंड एंड ऑल दैट, राइट?
Right.
सो आई थिंक गोल सेटिंग इज वेरी, वेरी इंपॉर्टेंट. Second, very, very important again, and Vivek, you have already touched upon that in one of your biases, is about diversifying your portfolio.
Yeah.
It's very, very important. From you can do it in multiple ways, and one of the strong ways what Vivek had just mentioned was about asset allocation. I think that reduces the overall portfolio risk and mitigates the impact of market downturns. And lastly, I think for me, two things have worked very strongly, and in the later part of my career in the last 10 years. One is educating myself. Again, I've been just fortunate to be interacting with people like Vivek and a lot of managers and a lot of people whom I meet in my day-to-day job. But that doesn't mean that somebody else will not have that opportunity. I think there is so much literature out there, so much information out there. The access to listen to this well-read people is so much on the internet, right? I think you just have to choose your heroes wisely, as Vivek also mentioned in the earlier conversation. So keep educating yourself. There is nothing that you know it all. Markets will always surprise you by saying, boss, I'm much larger than your knowledge. So market will always keep on throwing. And lastly, initial years, again, Vivek mentioned, focus on your own skills, focus where your career is, because that is where the major part of your wealth as a foundation will be created, which eventually you can go for investing. So don't shy away from seeking professional guidance when it comes to investing, because it is a full-time job. It can't be a very, very part-time that boss do phone kar diya, do button daba diya, ho gaya investing. It doesn't happen that way. There's a lot of research which goes behind, as Vivek mentioned. In their case, they see 130 factors. Imagine the kind of work Gulaq must be doing, right? And of course, every manager has their own set of philosophy. You just have to see where your inclination or alignment is as a person, because we all have different personalities. So if you feel that this is something I resonate with, this is something which I connect with, definitely you should go all out and seek professional guidance. So this is something which I thought to share, Vivek. Will be more than happy if you can share your closing remarks before we wrap up this.
I think one of the points that I would like to highlight and which you just touched upon is diversification. And that I'm seeing a bit with Gulaq investors also, because of the returns that we have been able to give. Obviously, we never commit that we'll be able to repeat that, right? It a lot depends on the markets, how it all goes. But what many people do is they try to concentrate a lot in one of the funds that is working well. It could be Gulaq or any other fund, but that I see a bit happening with Gulaq, that people's expectations have gone through the roof from the markets, that we'll be able to deliver so much in next 1 year, 2 years, 3 years. I think that is again a bias. One is obviously you're over concentrating, which is not good. But another bias is the recency bias, जिसमें हम शॉर्ट टर्म को देख के लॉन्ग टर्म एक्सट्रापोलेट कर लेते हैं कि 1 साल में इतना रिटर्न दिया तो 10 साल में इतना रिटर्न देगा. So I think the expectations again, this is at a point of time where people who have just entered in last 2-3 years, they have seen phenomenal markets. Most of our investors are in that category. They have seen phenomenal markets. I think over long run, definitely we can't expect the kind of returns that we have seen. We hope we are able to beat the markets over long run, but definitely the kind of returns that we have seen over last few years, those are kind of very unreasonable to expect in long run. So I think one of the parting remarks is about the setting right expectations. If our expectations are not right, we are more likely to do mistakes We are more likely to take more risks in the market, which obviously is not worthwhile. So setting right expectations is again a very, very important thing to do in markets.
So if I remember correctly, Vivek, I think you told that you wanted to share one slide. If you have covered that, great.
So I think, yeah, I've covered most of the
Perfect.
points about how to handle these biases. So that
Perfect.
I have covered everything.
Perfect.
Yeah.
Perfect. Great. I think this was super helpful, Vivek, and something different to break that monotonous journey of our interactions also with a lot of managers where we focused on
Yeah.
markets and all that. So the whole idea was just to take a pause. And especially in this current good times, right? It's very difficult to take these pauses when you are in your fourth
Right.
gear, right? And by the way, you are in your gear six. The name itself is sixth gear, right? So you can imagine how difficult it is to bring 100, 200 people watching you live on a Sunday afternoon and saying कि बहुत शांति से बैठो, sixth gear में भी आपको break लगाना है types. So I think this is super exciting and looking forward to have more such insightful sessions with your experience. And I'm sure you have been very, very regular and vocal about your thoughts on LinkedIn as well. And we have been keep on sharing those thoughts of yours via blogs, via push notifications to all your investors. So looking forward to have more such insights, Vivek.
Thank you, Rakesh. Thank you. It's always a pleasure to talk to you and share whatever I can with others.
Perfect.
Thanks a lot, Rakesh. Thank you.
Thank you, Vivek.
Thank you, everyone.
Have a great weekend.
Bye.